My name is Robert Bonavito, New Jersey forensic accountant. This video is part of a series of videos where I discuss forensic accounting topics for educational purposes only. If this was a litigated matter, I would take a different approach, have different conclusions based on different facts and circumstances. Hi, my name is Robert Bonavito, New Jersey forensic accountant. Today's topic is the IRS is watching your divorce. We get involved in a lot of matrimonial matters, and usually taxes become relevant at some point. And the reason the IRS is watching, I have letters from the IRS written to people who are divorced asking for copies of their divorce agreement because they want to go through it and see if there's anything in there, if alimony isn't structured right, if some assets were transferred without proper taxes. They can go in there and make some money. For example, when you're getting divorced, of course, alimony is a deduction to the spouse paying it, and it's income to the spouse receiving it. If you keep the house, you get the basis of the house. If you get to claim the children, you can deduct that on your tax return as them as dependents. There's retirement issues. There's stock basis. I had a recent case where we had a portfolio of $2 million in a divorce matter, and the client called me up and they went through the divorce. I said, well, why don't we go in and look at the two portfolios, because they were in separate accounts and they were worth about $1 million each. And so we went in and looked at the portfolios. Let's say that's one, and this was the other one. This one portfolio had a basis of $100,000, and this one had a basis of $900,000. Now, what do I mean? The stocks in this portfolio were purchased for $900,000. These were purchased for $100,000. Okay, so here, the taxable portion, if they sold that, would be $900,000. Here would be $100,000. Okay, and we looked at the investments and we determined they were approximately the same risk. So we told them to take this portfolio. Okay. And here's what happened, this spouse sold their stock. They paid, let's say they're 33%. They paid $300,000 in taxes. Okay, they sold their stock. They paid $30,000. $270,000 saving just by doing a little bit of tax planning. And there's so many other opportunities to do tax planning by thinking out. Now, we were paid to do this, so we gave our client the best advice, and they didn't feel comfortable. They didn't have anybody on their side looking at it because they may have found the same thing, may not have. They could have been focused. The attorneys are focused on other issues, more important issues, quite frankly, like child, to deal with children and things like that. We're focused on the numbers, and so if you are thinking about or getting divorced, it's usually worth your while to take a look at the divorce from a tax standpoint, because remember, the IRS is looking at this, and they're looking at this portfolio. They expect to get $300,000 when it's sold, and they sold it right away. I know that, and my client sold theirs too. But like I said, they walked away with $270,000 more. That's a lot of money. My name is Robert A. Bonavito. If you have any questions about this video, feel free to email me.